All right, this is the portfolio update for Texas Vestments, January 2023. Not a whole lot has happened this past month. Let me first go to our performance. We are currently sitting at 3% for the year. We're about halfway through our fiscal year. We do have a little bit more cash on hand, so 27% cash, that's good. So definitely looking forward to getting into the consumer cyclical sector that we have been out of for a while now. Take a look at our current holdings. This is the consumer cyclical sector. As you can see, we don't own anything there. We cannot get into general parts company because the price has gotten too high. So we're going to have to look at what other options we have there. Rogers, again, long-time holding for us, has done really well. It is currently down right now about 7%. We do have a standing order to purchase 40 more shares to get us to an even 100 once the price gets down to that 10% range. So hopefully that'll happen, within next month or so. But honestly, based on what the price performance has been, I think that may be hard to do. Because, like I said, it's performed so well. All right, ENB, this is our energy holding. We got into this company primarily because the price does not move around very much at all. Currently down about 7%, but doing really well for us, kicking out a nice dividend. The program is actually calling for us to have 324 shares. Right now we have 200, and so we do have an order to purchase 100 more shares. I'm sorry, we sold an option to purchase 100 more shares at a bit lower price. So we'll see how that goes. All right, Coca-Cola, currently down about 3% right now. And again, this is as of January 2. I'm recording this on January 11th. The market has risen a bit since then. So a lot of these numbers have changed, but on the 2nd of January, we were down about 3%. Now I think it's probably less than 3%. Anyway, program is calling for 172 shares. Currently we have 100. And so if the price does drop low enough for us to purchase more, we will definitely do an analysis before doing so. But the idea is to, of course, sell some options to get that done. All right, Merck done really well for us. We are up almost 40% on this position. Very small position for us. As you can see, we only have 15 shares. Program wants us to have 20. And so unless there is some glaring reason for us to move into another medical company, we're just going to stay where we are and book those gains along with the dividend. All right, paychecks. This one is actually incorrect. Get that changed. So we did buy 10 more shares last month. So we need to update not only the number of shares we have, but also the price that we have it at. Another parentheses. All right, there we go. All right, so currently down about 3%. Program calls for 82 shares. If the price continues to drop, we will definitely look at potentially buying more shares to get us up to an even 100 so we can start selling some options against this position. All right, Southern Copper. Southern Copper, long-time holding for us. We're up about 17% on this name. We currently have, we sold an option to sell this company at 60 $60. Okay, currently the price today is somewhere around 73, so it's going way, way up. This does mean that we won't realize the entire $73 profit, but we're still going to get a really nice profit at $60. We never cry about money missed, only money lost, right? So we're definitely going to make some money on this. I think the option expires on the 20th of January. And so on the 20th of January, we will have sold 100 shares and we will we'll own 30 shares. And then next month, we'll look at potentially either buying shares in this company again or moving into a different name. And of course, booking those gains as well. All right, Regions Financial. Again, long-time holding for us, currently down 17, almost 18%. Doing well though. Ready for the next quarter so that we can do another analysis to see exactly what this company is worth. The game plan is to do that analysis. If in fact we find out that the company is worth more than the current $25 that we have it at, then we'll look at potentially buying more. If we find that the company is valued less than the $25 that we currently have, we'll look at selling some options to sell out of this position at a loss. All right, Corning. Again, a decent holding for us, down about 13-14%. Program is calling for 203 shares. We have 200, so we are really even at where we need to be. If the price continues to fall, we will look at potentially buying some more shares, but right now we're holding steady. Another thing to mention is, like I said, that was as of January 2nd. Right now today, Corning has come back quite a bit, and so I don't know if we're still down 10%. We may be down a little less than 10% as of today. All right, MPW. This is not our largest holdings, but it is one that we are down the most this year. So 37% is what we're down by. We are even as far as what the program is calling for. 500 shares is what we have. And so again, waiting on the next quarter's results to do an analysis to see if this company is, valued at more than the $18, $19 we have it at, or is valued less. And again, the game plan is to either sell some options to buy more, okay, or sell options to sell at a loss. All right, ETR. This is our utility sector has done really well over the last couple months for us. Currently underweight in this one. So the program is calling for 74 shares. We only have 20, but because utility sector has done so well, we haven't had an opportunity to buy more shares. We're currently up about 12% on this particular position. So we may look at switching out into a different utility company. But, over the last 3 months at least, every utility company has performed about the same. So, again, unless there's some glaring reason to move out of this one, I think we just stay there, continue to see this gain, and collect those dividends. I do want to look at our actual money returns, because I think those are a bit more important and straightforward than looking at just percentages. So as you can see, in the month of December, we made $569, which equates to less than 1% return for the month of December. Over the last, what's it been, almost 8 years now, we've returned on average $212 a month. Which brings us to, again, about 0.6%, a little less than 1% a month, or 7 3/4 for the year. Over the past year, we are looking at $356 a month, which equates to 6.5% for the year. And then over the last 3 years, we've pulled in $377 a month, or almost 10%. For the year. And so I've talked about this before. We really want to see our volatility increase a little bit. Again, like I said, our portfolio right now is predicated on low volatility, low risk. With low volatility and low risk means low returns, right? So I mean, it's a good thing because we've seen the market go up and down and down and down. And so our portfolio, I am certain of this, will definitely beat our benchmark this year, which is the Dow. So we've definitely performed better than the Dow did this year. You know, we're only halfway through, so we'll see what happens over the next 5 months or so. But I'm definitely ready to see this volatility number tick up. You know, like I said, over the last 8 years, it's been double. Been double. Over the last 3 years, it's been almost double. And so, you know, this 1% simply means that every month we're going to either book, you know, 1.5% return, or we can lose 1.5%. And as you can see, the numbers here over the last, you know, 3 months, it's been right around that, you know, less than that 1%. We got up to almost 1.5, one there, and then we have this -2 back in May, and then it goes back to 1.5, 1.5, and 1. So, you know, not horrible, but definitely want to see that tick up. Let's take a quick look at the chart. I think I have this one going all the way to 23. Yeah, I do. All right. So again, these are all our returns, right? And so as you can see, on average, our portfolio stays right above the zero, right? Meaning that it doesn't go far above that 1% in any 1 month. We do, however, see some outsized gains up here, right? And then we see one big loss down here. What I think is really important is that our one really outsized loss it is still less than our outsized gain, okay? And even when you see some of these dots down here at the bottom, they don't come close to the dots that we have up here at the top. So, you know, again, over the last 8 years, we've really seen some really nice returns, some decent volatility. Over the last year, it's really subdued. But again, that's because, you know, that's kind of what the program is calling for. I think it has worked for us, but really ready to get it going into something else. All right, that's it. And again, our orphan shares doing fairly well. Not going to get rid of these things unless we have to. For right now, they're just sitting there collecting dividends for us and kind of just holding cash is what's happening.